Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com in Vancouver. Welcome back to the show, Bob.
Yeah, hi, Jim. I always enjoy our Fridays together, and it's been an interesting week.
And welcome back to all of our fans, for you, I guess, and the people who tolerate me from around the world. Our question today comes from Michael. Hi, Jim and Bob. Financial commentators say that one can only ride the wave of liquidity in this market. They say that the March 2020 crash and the explosive recovery to new highs in the markets in less than a year demonstrates that the Fed can and will bail out markets every time with even greater liquidity, whatever it takes, even if it crashes the dollar. Bob, is there a limit? It seems like this market will never turn over, or to borrow from a phrase by Janet Yellen in regard to quantitative easing, perhaps the topping process is like watching paint dry as on a wall. She can't even get the saying right. Anyway, Bob.
This is not like watching paint dry on a wall, and yes, it does seem like it's going to go forever, and it is extremely wild out there. I think the idea that the Fed stimulus pushed the market up is not quite correct. Market crashed because around the world, very aggressive governments shut down employment on this COVID promotion. So it was never happened before. But the theme we've been going on is that this year was likely to see the top of the bubble, and in which case there would be likely pretty firm economics with it. And when you look at recent moves in base metal prices and crude oil and stuff like that, there's some firmness back there now. So the hit to employment was a very strange event, but it didn't really push off the speculation. So what we want to look at in answer to the question from Michael is it Fed ease pushing the markets up, or is it a natural rebound in the financial markets that is allowing the Fed ease to appear to hook up? And my case in looking at so many great bubbles in history, and to me, it is that it's the rise in prices that allows traders to leverage up and get reckless, and it allows central bankers to get reckless as well. And if the concept that the Fed is there to provide liquidity and to prevent bad things from happening, there would have been no crashes in the past, would there have been? So our tools, technical tools, have been registering technical excesses, and we had one that we came out with in January, which was that in November, the rate of change in market growth, margin growth on the NYSE got up to a certain level. And then with that accomplishment, 6 months later, you could count out to a probable high in the senior indexes. That 6 months counts out to May. So then we've had the phenomenon of a massive, huge speculation in stop game and these things, and Bitcoin blew up in February, and some of them have crashed, but you still have a raging bull market for other stocks that somewhere over the next few months, the whole bubble could culminate, and in which case, when it comes down, as in the past, the power shifts from central bankers. So, Michael, here's the answer to the question. Is the power shifts from central bankers to margin clerks. And the margin clerks have a very strict job definition, and that's to get the accounts in line. And of course, the job definition of a central banker varies all the time, but you can certainly say that recently their job description is to get the accounts out of line. They want everybody speculating in the stock market. They want it up because they figure it'll eventually help the economy and all kinds of things. So the next few months in the financial markets are going to be very interesting.
We'll have more with Bob Hoye right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Bob Hoye. Bob, a headline that caught your line, and it's probably connected to the question Michael had for us. Overstimulated stocks soar 75% in an unprecedented rally over the past 12 months.
Yep, that's the headline, and when you look at it, a 75% gain. Now, the speed at which the crash happened from January down to March was, within 2 months. Often major crashes can complete within 2 months, and that's what happened this time. So, yeah, it's been outstanding.
Argentina faces a debt crisis. It doesn't have the money to service its debt. It may default. Haven't they done this before? And is it something that could happen to all the countries that are just forking money over like crazy because of the COVID crisis?
Yeah. Argentina again. So this is another outlying country with a central bank that's discovered they really have no liquidity. So March the 1st was a headline on this, because it was South America, Turkey, and Brazil, and then now you've got Argentina, and this is the way it works: is the problems appear in outlying financial centers with their central banks running out of liquidity, and then this is likely to continue, and more than likely it'll hit New York and London in the fall, when the fall is a classic time to discover a financial crisis. Yeah, Argentina said, I loved it, we don't have the money. This is classic, and one should be watching it.
Does a country really have to service its debt? Because we always wonder, we've never seen Canada, the U.S., or even Britain go bankrupt, per se. But could it happen, and what would the result be? Would they dip into our bank accounts to save the government's treasury?
Oh, Lordy. Yeah, Canada, England, the U.S., going absolutely default, stop payment would be improbable, but not impossible. The financial speculation has been the biggest in history, so from which there is no easy way out. There will be a liquidity crisis at some time.
And both Canada and the U.S. have legislation, don't they, that allows the government to dip into your bank account. A lot of people aren't aware of that.
Yeah, also, you never know in emergency just how far they will go. And one of the things that will happen is that they are not interested in the individual taxpayer. They are each level of bureaucracy will be interested in its own survival. Individuals are secondary, so it could turn very ugly.
We'll have more with Bob Hoye right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bob, is some massive fund forcing deleveraging of the markets?
I just saw this one a short while ago. It's happening today. Some hot stocks, Shopify, Zero Hedge wrote it up nicely. It's a site worth looking at. And there's been sudden hits, huge block trades. And they then wrote a term that I really liked. Is it a result of forced deleveraging? Yeah, forced liquidation, forced selling, margin calls. So this also, Jim, relates to something we talked about a couple of weeks ago in a company I'd never heard of before called Greensill, Greensill, some kind of a mortgage lender, obviously aggressive, was running into trouble because when we talked about it maybe a week or two ago, it was then that a big industrial company out of India was suddenly in a problem because funds from Greensill weren't forthcoming. And then now you've got a couple of very hot stocks getting hit very hard suddenly. And the article says that forced liquidation and somehow relating to Greensill. So this is where the theory of central banking is that as a lender of last resort, they can come in and fix a problem, thus preventing a credit crisis that in turn prevents a recession. But the problem is, as I've seen it, and as anybody in history has seen, that in a great bubble, everybody gets leveraged. So the theory that acting to prevent one agency from failing will prevent a major contraction is completely hopeless. It's never worked in the past because it's based upon one problem. And at the end of a great bubble, you've got a jillion problems, and the theory just doesn't work because this is, when the Fed was being formed in 1913, the boast was that as a lender of last resort, they would prevent serious credit crises, and that would prevent recessions. And let's not count the current recession because it's really weird out there, but there have been 18 real recessions since the Fed opened its door for business in January 1914. Therefore, the theory does not work. And people should really get that through their heads, that the theory of central bankers being there to protect your portfolio has never worked. So you got to make the decision on your own. And prices in most stock sectors are very high.
Bob, here's something that has every morning worker and perhaps anyone who has to work a shift quaking in their boots. The world is facing a coffee deficit.
Yeah, I haven't been following the coffee market. And I grabbed the headline this morning and didn't even take a look at the price of the coffee, but they were calling it a supply chain nightmare. So somewhere there's been a perceived shortage of coffee. Probably many people in the trade are grabbing positions and bidding it up. And all I understand is that if you go to Starbucks, the coffee you buy are relatively very expensive. And here we have another excuse for the major coffee houses to raise their prices again. But it's a sign of the times. I think, like anything else, the price will go up. Any of the delivery problems would be solved, and as the price goes up too much, there'll be less consumption. So market forces will kind of look after it, and I don't think they'll have to have a government committee to look into the supposed shortage of coffee.
My mother was a real coffee connoisseur. She loved a great cup of coffee. My 5-year-old nephew was visiting Mom, and he knew that she loved coffee. And one morning he said, Grandma, can I get you a cup of coffee? I know you love coffee. She said, well, sure, Johnny, go ahead. So the nephew goes into the kitchen. He comes back with a huge mug of coffee. My mom starts to sip from it, and she goes, what the hell's this? There's a G.I. Joe in the coffee. And little Johnny says, well, Grandma, I did it because the best part of waking up is soldiers in your cup.
Oh, for gosh sakes.
Bob, thank you so much for being on the show.
Listen, it's a good Friday, and we look forward to next week.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. If you have any questions for Bob, and he loves to answer them, you can send them to info@housestreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @Housestreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of House Street Media Incorporated.